Konnichiwa and Assalamu alaikum. In corporate news this week, we've seen a strong rise in DFM and ADX markets from a combination of rising oil prices to around $75 a barrel, a weaker US dollar, which is very good for GCC markets, and also greater confidence in world markets around Asia, Europe and also the States. The best investments to gain access to this market rally going forward remain the large cap industrials and some of our preferred banks and property. This includes DFM, Air Arabia, Gulf Navigation, Dana Gas, Aramex, DU, Emaar and First Gulf Bank and National Bank of Abu Dhabi. This week Dana Gas has made another two large discoveries in the Egyptian Nile Delta region. The total value of these gas and condensate discoveries is 86 billion cubic feet, taking the total estimated reserves of the company to close to 3.9 trillion cubic feet of gas. The current production rates out of Egypt from Dana Gas have increased to 37,000 barrels of oil equivalent per day, and we expect this production profile to increase going forward, underwriting the company's earnings growth and justifying its high PE of 28 times 09 earnings looking forward. We remain overweight on Dana Gas and believe that the stock can easily trade up to 1 dirham and 50 fils over the medium term. Shanghai International Ports, based in China, has this morning given guidance that trade activity from its largest mainland port in China actually reached positive volumes during the September month. This is another sign of an incessant growth and pockets of green shoots recovery in global trade that we're seeing, and is a clear sign that DP World's ports, also located in Asia, including Vietnam, India and China, should see some stronger growth kick into gear during the fourth quarter. We remain overweight on DP World and believe that investors can accumulate on current levels for the long term. The management of Abu Dhabi Islamic Bank, listed on the ADX, has this week stated that it has adequate provisions to cover potential losses for 2009, and that looking into 2010, earnings will grow by at least double-digit rates. This has been a strong catalyst for the share price in recent trading sessions. Telecommunications company DU, listed on the DFM, this week announced that it is in agreement with IBWave Solutions in order to come up with a all-encompassing wireless network package to be placed in the apartments in the UAE. This is further semblance of the investment that DU is making into high-rise localities and the infrastructure for telecommunications in order to grow its market share in the UAE versus main rival Etisalat. We remain overweight on DU and believe that it is a strong growth company with excellent long-term earnings profile. Discount carrier Air Arabia intends to begin flights from its new Egypt hub in the first quarter of 2010, with potential to expand further hubs around the Egypt country. The company has also said that the dilution in yields has been around 8% during 2009 with the weaker global trade figures. However, we continue to believe that Air Arabia will outperform the global industry in terms of passenger turnover and earnings growth. We remain overweight on Air Arabia with a 1.33 price target. Dubai Holdings has repaid 250 million US in loans to BNP Paribas, following on from last year's 300 million US loan repayment. This paves the way for a clean out in the company's debt structure in preparation for the upcoming merger with Emaar, listed on the DFM. This is a good signal that DFM will be entering into a company with a more favourable funding structure. RAC Properties has announced that it intends to launch 2 new projects over the medium term, in addition to handing over 94 villas in the Mina Al Arab project by the end of the year. More coverage that Gulf states will intend to launch an agricultural fund of around $2 billion US used to buy up farms and land particularly in developing countries, in order to secure the food supplies for Gulf states. We believe that this brings to highlight the importing bias towards UAE and GCC economies of their food, and also focuses on Agthia, which is a listed food and beverage player in the UAE. Agthia has strong government support, excellent cash flow, and an already successful feed and flour business on top of a bottled water business and a vegetable paste business. We believe that its key owners, the Abu Dhabi government, will over time drive the company into upstream poultry and meat production, which will underpin strong earnings growth over the long term. Agthia trades on a forward PE multiple of 10 times at a last close of 2.14, which we believe represents an attractive entry point for a company with this kind of growth profile. And last but not least, the chairman of Emaar Properties has stated that Dubai intends to issue the second tranche of the $20 billion bond during October or November. We believe that this second tranche will be crucial in repaying debt owed by Dubai government-related entities, and has indeed been one of the reasons for the strong rally in equity and credit markets over the last week here in the UAE. We think that the issuance of this bond will be of direct benefit to the likes of Arabtech, DFM and also DP World, and act as strong share price catalysts over the coming month. That's all for corporate news this week. Happy investing, Ilarika, and sayonara!